Joining me for more is Jared Holz. He's a healthcare equity strategist at Mizuho. Jared, what started all of this?
Hey, Kelly, thanks so much for having me. I just think it's a confluence of, a much higher utilization environment and a mismatch in terms of financial modeling that's been obviously more challenging than, the industry thought and investors when we look at, the price action with the stocks over the past 3 to 6 months and really for the better part of the year. And so this has really turned into one of the more volatile earnings sessions we've had, and it's really just 1 week in. So there's a lot more in store probably.
So from a very top level point of view, the health insurance companies are doing poorly because people are using them more.
Yeah, essentially. I think when you really take a look at this big picture, the procedure volume environment has been incredibly high for a long period of time. There are several factors that are driving that. But at the end of the day, when you look at these healthcare insurance stocks, what you really want is low utilization, patients using the system less so that the companies earn more. And what we're going through now is pretty much the exact opposite of that scenario.
Is that because of weight loss drugs? Some have speculated that, when it's easier to get in shape for that procedure, you're going to do it, or it's pent up demand still post-pandemic. Does anybody have a convincing explanation for this and how long it might persist?
No one really does. I think it's a combination of things. You mentioned, the pandemic and COVID and patients that were, a little bit reticent during the peak of that situation to get any major surgery. Those have come out of the woodwork, but we're really 4 years away from peak pandemic. So it's got to be other factors. I think the economy being very strong, employment being strong overall is a driving factor. You're seeing some evolution or migration away from hospitals and into surgery centers where it's a little bit easier to get procedures done in an environment that patients want more. And then potentially on the GLP-1s, but it's been only a year really since both Lilly and Novo's drugs have been approved. So I think it's a little bit early for that, but it certainly could be a factor.
It's just a situation where, many users are frustrated by the experience of their health coverage, and yet the stocks are struggling. It feels like there should be some winner here, and I'm not sure who yet it is. And then you get to what's happening on the Medicare front and Medicare Advantage, and Humana's stock is down, correct me if I'm wrong, 41% this year. Bertha Coombs has been doing some great reporting on this. Yeah, Humana's down 41%. Jared, what's going on that front, as this is also the time of re-enrollment for a lot of these services? Are they being overused as well? Are they going away? What's happening?
Yeah, I think they're being overused. So much of this has to do with, Medicare Advantage rates and how that translates into numbers, in terms of financial modeling. And when we look at the procedure volume effect, that we talked about earlier, the Medicare Advantage markets have not been this challenged from a company standpoint in quite a long time. So you've seen Humana reassess or recalibrate its earnings several times already this year. And so I think there's a lack of visibility. We know that utilization trends are very high, and maybe Medicare Advantage rates increase over the coming years. But still, when you look at the effect of a higher procedure volume backdrop, the STARS ratings, which indicate how much companies are going to be reimbursed on the Medicare side for their individual plans. Yeah. It just seems like the visibility for Humana has never been poorer.
And perhaps Cigna must see something that we don't, because they're going as a relative beneficiary from not having that exposure to reportedly pursuing that exposure once again. On that note, just leave us with what are your recommendations for investors who might have this exposure or be thinking about ways to maybe play the space?
Well, yeah, it's certainly tricky. I think United Healthcare, as a more of a conglomerate that has some offsets to some of the things we're talking about, being more a larger, more all-encompassing network, might be the best way to play it over the short term. I think investors have really liked Cigna, but now you've got this overhang with a potential deal. I do think there is value in Humana down here, but you've got to take a long-term approach, which could be what Cigna's doing in renewing talks.
All right, Jared, we'll leave it there for now. Thanks for your time today.